How can early stage founders scale smarter, raise capital more effectively, and connect with the right investors? In this episode, I talk with Iva Skojo, investor, advisor, and founder of Workshop Lab, about the realities of rising from family offices and venture capitals, the power of founder community, and the trends shaping AI and deep tech. Iva shares lessons from working with founders and investors across New York, London, and Paris. Hello, Iva.
Hey, NSF and Menlo Park. Those are our latest chapters.
Iva, could you start by telling about yourself and how you got into venture capital and family office?
Yeah, no, for sure. And again, it was so lovely speaking with you before this interview and getting to know you and also seeing how international you are and how you've spent also a lot of time building, growing, scaling, and then moving around. I feel like that's a theme that everyone who I choose to work with or who finds us has an experience with. We don't really have a single venture fund or a family office that is kind of just based from one location, only has been one. So I think my global background has always attracted these type of venture capital firms and family offices. So the first exposure I've got into it was with New York City's largest accelerator and a VC firm called ERA, which had chapters of investing in Turkish, Japanese, and Italian startups. So we would have startups come in from Japan, Turkey, and Italy, literally to our office. So everyone would be from Japan. Their English would be nowhere near good as ours. Same with our Turkish founders and Italian founders, but amazing startups and projects. And we would kind of like prepare them for the US market. So I was there as an intern while I was doing my full time master's at Columbia and Columbia Business School and my own startup release. So I just wanted to be, in an accelerator environment that's not related to Columbia, even though I had my office at Columbia Business School, because I wanted to see how does it actually work to be with other startups who are doing this full time. So it started all with being with ERA Global, which was the countries that I told you about. And then they would only be remote because we're still like in COVID period. So then we would have like startups in person who are our US founders. And I was like, it was so cool, like in Flatiron in the office with like 16 teams of founders every day from just the current cohort and then alumni. So it's kind of like YC of New York, in and out and bringing and thinking, and then having another cohort, coming in and interviewing and picking who we select, then thinking who's going to be good from our best batch, who's going to like perform and get a follow-up funding of us. So that's how I started working with VC firms. And then that and I had my own startup, so it was just like kind of like a natural thing to do all at once. And then obviously New York is a city of a lot of family offices in general, so given that I was in ventures, every time a few of them were in town, they would come and check our office at ERA, and we were fundraising for a climate fund, so a few of them were interested into that. And then as I transitioned more to be living in London, to be closer to Croatia for a little bit, I got more introduced still in the venture capital, but more family office side of venture capital, where a family office within its investment vehicle would have a venture capital firm in it, if that makes sense.
Thank you. And you had experience and you have experience in New York, London, and Paris. What difference do you see in how this ecosystem approach startup and venture?
Yeah, no, I feel like I just spoke about it like a little bit before in our little, pre-interview with each other, but I think the cities are quite different and it really depends on personality. I think New York is, we said it at my first VC fund, it's kind of like you're playing a video game always at a hardest level. So like let's say you're like playing Mario Kart, it's always going to be at like level 9, which is sometimes great because you're always at like the last level, but sometimes it can be exhausted. So I really have enjoyed building in New York City and having startups who can build in New York City, but it's not for everyone. But those for who is it for, it's perfect because it's perfect for 24/7 culture. If you're a night owl, there's so many things to get done. You can still kind of get your private life in. There's so many concerts. There's so many people who are outside of venture and startup worlds in there. Networking is just so spontaneous. You get invited super easily to places. Nothing is really hidden from you in New York City, I think. I think New York is the most like open-minded city for people. It's quite expensive to live in, so I definitely think no found I would not recommend to a founder to come there unless they have a really strong ground already, or if they had like high salaries before from banking or like high paying jobs. So like I think it's really good like for that. And then for certain Europeans, I think it can be really good because it's quite similar to like London or Europe, just at like 5x the speed. London's really good for founders if you know where you're going, but I think it's the same for like investors and like family offices and stuff. What I don't like about London is that it's a bit too widespread in terms of neighborhood. Like in New York, you can like city bike everywhere and go like in and out, and like you can burn out if you overdo it. That's on you. But like London, just geographical challenge of like shortage where there's so many startups being 30 minutes away from like Marylebone or Mayfair where the investors are, and then like just it's kind of widespread, like the whole like ecosystem and community, so you do have to spend a lot more time in that. But what's cool is that founders are way more, there is less transactionality like in the US. Not everyone charges for everything. People are way more like friendly, and there's a lot of growth of these like communities, especially in AI and like the group chats and things like Unicorn Mafia, which is like some of Club Y members are like very very big in there. Hackathons, like it's very, if you're like a, I think if you're like a technical person, you can get a technical person with no experience. I think you can get a better value of building in London because of all that hackathon culture that we have right now. If you know, if you've done stuff and had experiences, then you might as well be better off in New York. And then like London investors like to be really hands-on and coming to these events and investing in you. In terms of Paris, I think Paris is really tiny, which is really good. And then it's tiny in its way that city is smaller than London and New York, and that everything can kind of happen last minute, and that a lot of people are in town for some big conferences. London has conferences like in finance, like there's so much going on always, all the time, kind of like New York, but like there is a lot of startup focused things like Viva Tech, like not like London Tech Week, but just like very specific startup things in Paris. And Parisian government has been amazing in supporting startups. So they have this thing called Station F, which is equivalent of almost like, I wouldn't say French YC, but I almost would, because it's just like one central campus where all the startups go and gather. So at least everyone who's a founder would know where to go. And then there is like demo days inside it and a lot of investors. So I think they've really made city very, very founder friendly. There's all these coding programs, sponsored by um, previous or former unicorns or like affluential family offices and people who are like supporting Paris. And what I think it's cool is that even though London is, I think, the most international city, people are literally from every country in the world. Like in New York, because of visas and everything, it's harder, and like everyone becomes a bit more Americanized. In Paris, there's this whole culture also of people from like Tunisia and Morocco and like just so many other like countries and cultures you wouldn't think of, but they have a root in Paris and other cities within France. Whereas like London, it's mostly, you're not going to find like a lot of British founders there. It's going to be more international. And then naturally, I think when people are from the same country, they kind of like help each other even more, just because they're like literally from the same country, grew up the same way, etc.
I have a few questions about family office, specific family office.
For sure.
How do family office think about venture investing differently from traditional venture capitals?
I mean, I think the best thing about family offices is freedom. Like family offices can write very big ticket sizes because they're focusing on, they don't they don't have LPs to report to or anyone external to report to when it comes on how they want to deploy their capital. So if they see a YC company and if they want to have a bigger stake in it, and like if they're already spending their time because they're doing so many things at the same time, they're going to want to put $1 million in or lead that round or have like a bigger exposure for that. So I think they look at venture investing as very selective. That's why they're being very secretive, and like you can see a lot of things on their LinkedIn, you can see a lot of things on their websites. Even for like a lot of family offices I work with, the websites are just a logo of something, etc. And like they prefer to be more stealth and quiet, but then when you are in the rooms with them, they can move really really quickly and be very impactful if they invest in you, and it's really trust based. Whereas like VC, there's things that a GPs have to just have higher barriers, which is fully understandable and like important. So if you're a VC fund who only invests in European B2B SaaS startups, but you're like the most amazing B2B SaaS startup in Australia, if it's not within your investment thesis, you can just not invest in it. Or like if you have a minimum that a startup has to have a revenue, a VC cannot invest in it. And it's also VC could be fundraising at the same time for another round. So maybe they just don't have the capital at a point. So it's just like they still all want to get the best startup. It's just about the ability to move on it quicker one than the other, because in VC sometimes you have to go through multiple rounds of analyst, associate, investment committees and stuff. And then in terms of perspective for like a founder, I guess that also depends what their preference is.
Interesting. And what should the early stage founders keep in mind when rising from family office?
I see this a lot, especially with our like Club Y founders or Workshop Lab clients who, they all want to fundraise from them and they're just like, oh, just introduce me to a family office. And that's not really how it works. Like, and to get an introduction to family office is way different than to get an introduction to a VC, which already is hard to get an introduction to VC because I work directly at a VC table as well at Ultratech and at ERA. We're incredibly busy. So like everyone always wants to pitch you an idea. It's like a Shark Tank, but it's about finding the right time, the right place, or maybe the right person to introduce you to us, be able to like speak to you. And for family offices, it's kind of like they should keep in mind that these people are like in terms of business, like VC, but on steroids, because it could be a family office that at the same time is buying like a huge stake at, I don't know, I'm just gonna make up a company like Starlink, like anything like Tesla or like just something like they could be like busy with like running 10,000 employees and having to like open an office in like a super remote location somewhere. So VC is important to them, but like if their principal who runs the VC part of the family office or chief investment officer cannot get to the person who's of the family because he's busy with like XYZ, founders should be understanding that there is a reason why they keep rescheduling and that everything is kind of last minute. So like even me, depending which family office I am on a project on, often I have to be on a standby and just have to wait until other things that are higher priority get done over, a review of a startup. But then I think I'm always pro family offices because I think once you're in a family office network, you're protected forever in terms of like you get really good introductions, like you can always get more capital and you have advice of someone who's like built really successful companies and like is now using that to like invest more. So it is different, but it definitely is not something where the approach of play hard to get for them, push them, say that a round is oversubscribed, like it just doesn't work. Family offices are, it's wealth managers preserving wealth of high net worth individuals, and they want to be treated with kind of like,
Mm.
old school, like respect type of thing, where that would be my advice. And like also, if they are approached by a family office, to ensure it's very hard to find that though, because a lot of family offices are trying to be not so exposed online. So that's quite difficult. But like to ensure that they're actually a real family office, because it can be like a person emailing you from a Gmail, and then you can be like, well, I don't know who this person is, but that could be intentional because of the privacy of the family. But also that in case they are a legitimate, family office, is that there's a chance that there's not going to be much online to research. So just ask other people who have on their LinkedIn that work for family offices or network, or try to do some due diligence on your own whether this is like a real family office or not, because most of them are not going to have your flashy website, kind of like A16Z, etc. They're gonna try to be offline as much as possible.
Yeah, it's a very tricky moment how I can sure that it's a real family office, yeah, or how I can trust to this family office. What do
Yeah,
you have any advices?
I it's difficult because like even for me, like for interview for one of the family offices I worked with, it came from literally like almost like a made up LinkedIn account. It was almost like a CIA recruiting because I was like, who is this? What is this? Is this even real? And then I was on a Zoom with like a quite influential person. So I just think it's like I had a case of that in like Y Combinator, one of our clients. and members was asking something like that because someone was offering them, just like they wanted to close their whole round and like fly them into Switzerland to like see their product. But it was like a person of a person, and they tried to kept it like stealth. But I don't think family offices are gonna change that. I think it's just about going through the process of that. Like I would still say to people like it's better to get, if you can, $1 million check from someone rather than a $10,000 check from someone, even if they're don't have 10 million followers on LinkedIn, etc., or like have, A16Z Scout for them. Like I love all the big funds and I love working with them. And if I was a founder, I would prefer also having like a big fund name. But like sometimes it's not about the name and the label of the investor, it's about what it brings to the table. And like, sometimes the best things in life, as they say, money talks, wealth whispers. So there's a reason why these people like to keep their presence a bit more offline. And then once, when the moment is right, obviously you're going to see that it's a more established person who can invest in you. And I think it's really good. There's like a lot of podcasts right now and communities and conferences where you can kind of like tap into like who is a family office, and they are being more open. But like there's just a lot who are not, because otherwise they would be pinged that everyone like is asking money from them, if that makes sense. Which is not that's what they're trying to do. They're trying to invest their money, but it just like they're trying to keep their privacy as well.
How many
I guess
people
it's easier
work?
maybe
Uh-huh.
just
Sorry.
to add it, and like depending of like this is helpful or not. Like imagine if there was like CEO of Twitter, and if like his family office, not a foundation, like a family office was, being posted, and the person that runs it, like that inbox would be like overloaded. So it's just, yeah, maybe, yeah.
How many people work in family office and who make a final decision, invest or not in some startup?
I think it really depends on the size of a family office. I worked at a family office that only had 5 people. And then I worked at a family office that had 2 people. And I worked at a family office that had 80 people. So it really depends. I don't know what the average is, but it can be that it can be one person who's just running the whole startups department. So, or it can be just multiple people who are in the committee for the startup investing.
Mhm. And can you share a story where funding from family office played out very differently than from venture capitals, and what founders can learn from it?
Uh, yeah, I mean, I just think that, as I said, like, things that I can say, like, that are not confidential, is that it's just a different type of like VC recruiting. Like, if you go to YC, the school is expect that, founders reach out to you, reach out to them, have people cold warm interview, like that whole thing that you can do, be aggressive. I think with family offices, like whoever messages me is aggressive, I don't really appreciate it. It's just different. I think that there are people who should just find a way to provide value or be introduced to us by some other means. And then, as I said, a lot of actually VC funds are backed by family office, so we become an LP at a fund. So we, for instance, could be like, I'm saying we, like the family office community. So we could be like, if there is, I'm gonna say like big funds right now, but like let's say there is index, there's a chance that family office also has like put money in index. So like, and there's also a chance that they can invest directly as a family office. So what founders can learn is that if they're fundraising from family offices, they can get bigger checks, and that they're going to have to go through less pain once when they're in the call and if there is a fit. But it may just be harder to get that call. Rather than like with VCs, you can go through multiple rounds. A VC fund can be like, we like you, just get back to us when you have better metrics. And that's true. They mean it. They're just like, you're in review and then they put you for like better metrics. Whereas like a family office can be like, yeah, this is a good fit. This is what we're looking for anyway. And then they just, deploy the capital directly to you a bit faster.
Let's move in another section of questions. First problem for first tough thing for founders, it's build product. And second tough thing, it's fundraising,
Yeah. Yeah.
What's the most common mistake you see pre-seed founders make in their fundraising strategy?
I think everyone starts too late. I think that's like
Too
the
late.
easiest. Yeah, everyone starts too late. Like even for me, like for my side projects and stuff, like I still haven't started fundraising. I think like a lot of people are just okay. Well, either they start fundraising too early and are so aggressive and send like spammy like messages and like I don't even think your first message should be like, "Hello, I see you're an investor. We're fundraising right now. Please invest in me." Like, okay, like I don't know. That doesn't really resonate with me. But then it's also like if you're on LinkedIn and you have like an investor and then you're like, hello, are you free for coffee or me? Like that also too can be like hard. I like precision and maybe like, find something really, really specific that's like in the thesis of a fund. If you're at a fund, like an insight that you found, just like something that you can actually be like, yes, no, or maybe. But there is just like some people fundraise really, really wrong. But some people just have built amazing stuff and have done incredible progress and they just haven't started fundraising. And then they're surprised that they feel sad on the inside and nothing's going on. I don't know how to say it, but like you don't have to get into YC to start fundraising. You don't have to have $1 million revenue to start fundraising. You can start fundraising even with like a good idea and two people and see if there is a VC backed fund who like likes that. So I think that would be my advice that people start too late
Mm, interesting.
or that they do it just wrongly. So these are the common mistakes that I would say. Yeah.
Where do you see the strongest investor appetite today? SaaS, AI, deep tech, or crypto?
I have a business partner for Clubwise, so we separate our stuff. So he does the infra and AI, which I think is like really, really big right now, especially in like SF. Crypto, I don't look at, so I wouldn't be qualified to speak to, neither the family offices who I work with. But I think there is a huge interest in anything that's unsexy in terms of like deep tech and hard tech manufacturing. Wouldn't say aerospace. I'm on an aerospace deal right now, but like something within those lines of something that like accounting, like where like legacy industries that did not have an AI and have AI now. So that's what I would look at and not David. And David, who is my business partner, he would look something that is like how to make LLMs even better, how to make dev tools better. So like, going like into deeper of an AI, of an AI, of an AI. That's what some funds look at. Like, but for me and like most of my family offices, it's actually like easier for us to look into something that we're familiar with. So I don't work with like Silicon Valley based family offices. I work mostly with like London, New York, Texas, global, but like not necessarily California family offices. That's where I mostly work with startups. They look at something that maybe they can be even more easier familiarized with. So if it's a big industrials family that had like factories for years, for them it's easier to just like understand, wow, this is a problem we've been having for the past 40 years. It's so impressive that AI can do that. And then consumers coming back for sure as well. So you see this with like Lovable 11 Labs, so anything that can be like B2C and then be B2B eventually. I think that's like something not to sleep on because it's been such a long time to build something in consumer and make it investable. Like these stuff are already I'm really good in predictions in these things. I don't think deep tech is gonna die. There's something we're looking at with one fund who we're getting pitched at in resilience tech, which I think it's like a cool term to use. Like there, it's like mostly all these terms, and I think climate is going to come back because it's been a while since like climate has been touched. And one that I think everyone always looks at is health tech. I think health tech, biotech, anything in that field is it's like a pretty safe investment if it can be done well.
Yeah. What are the key differences founders should keep in mind when fundraising in the United States versus fundraising in Europe?
It's simple things, but I think it's culture. Like in US, aggressiveness works. Just, ask what you need, how you need it, and like how can I help you? And go to these events and be very precise. In Europe, it still takes getting to know the person, trying to meet them in person, trying to de-risk your product more. So if you're fundraising in Europe, I would work on de-risking the product more and trying to get something, whether that's revenue or traction sooner. Otherwise, it's going to be harder. Whereas in US these days, you can still get away with getting the money with no paid user, let's say, or something like that. But like as soon as possible, get like a paid pilot or something so you can prove revenue.
Thank you. Let's talk about communities and the products that you're building.
Yeah, sure.
Yeah, you're building a workshop lab and leading operation and club wide. What are these communities and what problem do you solve and who are they for?
Yeah, I mean, I think it's there for everyone who had questions from the questions you had like asked me about, like the difference between like a family office versus VC, someone who's been fundraising for 9 months, but the needle has not moved, someone who has applied to YC 2 or 3 times, but has not gotten accepted, but they're actually exceptional. So we created this with a name of like being called like a workshop lab. So we can all work together with a team of mentors, founders, and myself to figure out how we can scale your company faster, just like if you were in YC. So once when you get into YC, that you basically go to Series A, we had like an example of that. Or then maybe you don't need a YC in the end of the day. Every founder has a different fit, but I think once when you're like in a lab, you can really figure out that situation. So we have a 3-month bootcamp program, which is our founders pay to attend, and then they get the value that is usually like either like 500K seed investor check, pre-seed investor check, YC or something. So they really need to be able to, put in their time to work really, really hard with us on this focused private accelerator bootcamp that we have. And then that's how we do it. And then they become part of Club Y as well. And Club Y is like a more larger community. It's invite only. I'm very, very selective who I accept into it. I interview every person basically for like 1 or 2 hours or try to meet them in person to see how they can forever, be a member of this community. We haven't figured out yet whether we're going to make a product out of it. It's really, really stealthy. We have some group chats, we have some like connecting like group chats. Maybe we're going to have like a bigger membership for our investors or like proper membership for our founders so we can properly run it as like a company. But for now, Clubwise definitely like a signal that has been helping so many people in so many different ways. But I would love to figure out a way how to like run it or merge Club and Workshop Lab into one thing so we can do these boot camps with as many founders as possible. It's just from my side, it's been hard. It's been so hard to convince founders to pay for like a service like this, but then they always ask for help and they always like need, these extra questions. And then I say, like, you can obviously go on YouTube, like you can obviously, like figure this out on your own, but like there is something in being like in a concentrated environment of people who have done this before, and like our successes are like amazing. We have had so many Series A's this year. We've had people who we've like met before they were even founders. We had like so many YC success stories. So like it does work when you're together, and that's how even concepts like YC do work. But like in the end of the day, YC, like it takes people like 2 or 3 years sometimes of not being on a salary and like living off their savings and paying developers or like who knows what until they get to that moment, and then everything is worth it. So I think joining something like Workshop Lab or Club Y, it doesn't have to be us, but like a community that can help you, especially if you're a solo founder or not a part of like some larger university or like some incubator or something, is really crucial to kick you off from that -1 to 0, and then from 0 to 1, and then you handle it on your own. And the best thing about us is that we're comprehensive. So we get to know you from like before you exist. And then because of the other founder network that I have through family offices, which is around 800 family offices, we have the ability then with people who have like worked with us, we know them, we trust them, because as I told you, in family offices, it's all about trust anyway, than to refer everyone wherever they need to go. And like we know them, we're part of their product, they're part of us. And then we just like all kind of like help each other. So it's like a really cool ecosystem that we build now. It's just, about like scaling it, growing it, and staying organized so that we can keep running it.
Can you share a real story where a founder from your community achieved a breakthrough?
Oh yeah, for sure. We had a founder who was struggling for 2 years in the UK. It was a really hard time for them to be recognized anywhere, even though like I went to their office all the time and I was like, you guys are gonna be like IPO'd, like I'm gonna go to NASDAQ with you. Like you have everything. Like the co-founders were a perfect fit. They were separated well, they were up to date of technologies, their burn rate, like they were just like amazing. And then like I one day like they basically like I always knew they would get into YC, so I gave them like a few first referrals and like recommendations around like YC, and then the YC just wasn't working out for them, and then they were like, you know what, we're just gonna go to Techstars, which is like also an amazing program. We have a lot of people who have like gone to Techstars, but like they got lucky that like at an event, I was always telling them like go to an event, like just go in person. No one's gonna know about you if you're like sitting at LBS or like at like Imperial or Oxford building every day. So they got in and then they asked for an early interview with YC. So they basically then got into YC from that because they were like, hello, we got into a competitor. We're going to go with them. If you guys don't like us, that's okay. We just want to like let you know this is the last time. So they got accepted into YC. And then a success story is like, because I knew they needed something like this. Some of our founders just don't need it. And then we like, with the current one, we just found them a lead investor without YC because I was just like, you guys just need to like fix one part of your product and do things on your own. And then their revenue went from like basically them almost going back to like being an investment banker and like quitting to going from 11K monthly revenue to 450K annual revenue. Sorry, 11K ARR to 450K ARR, and then graduating from YC in top of the batch. And now they're like in SF, like apartment, fundraising, salaries, like new employees, everything. So like that has been like a really good like recent success stories, and we have quite a few more. Yeah.
And what does a founder need to join Workshop Lab or Club Y, and any specific criteria or conditions?
So like for Workshop Lab, we do this thing called Founders Diagnostic Test, where we sit with a founder. We do like a 15-minute pre-screening, which is free. And then we do a founders diagnostic test when we really like whether they're like a full-time member of Club Y or Workshop Lab. We just do this for them because it's a lab, right? So like we do like a full screen of whether they are at the stage where they think they are. And we have like me review it and a few independent VCs and people who have like fundraised before see whether this person is a YC material, whether there may be some for some more like a niche program. So maybe there can be like South Park's Common, like there's just so many like of these like programs that people don't even know about. Are they more like Techstars? Are they more like EF? Do they need a co-founder? We kind of like rank each category from 1 to 5, and then we it's an hour and a half. That's like a really really long diagnostics, and then we come back with basically a proposed idea for them, or like even some investors if they're ready for that. We're like, okay, like speak with these few people so we can like kick off the process, or we're like, you actually don't need YC, just like let's start your fundraise, or maybe you need YC, so let's try to get you in there, or you need to actually pivot on this product. So for aerospace, we fully built another product for the team because they had a SaaS product that they didn't even know about. So it's like that's step number one for like Workshop Lab specifically to work with us on a more formal basis. It's doing the founders diagnostic test and then deciding which type of boot camp is a fit for them. And then for Club Y, it's kind of like us getting to know the person through a conference, kind of like a very tap only situation. They can fill in the form, but we don't review them so regularly. It's more like speaking with a person telling you about Club Y, asking you some questions, and you have some like really like funny like specific like psychology questions, AI questions, like geeky questions. We want to make sure that everyone is like a unique person. We really appreciate people who are amazing and have sold companies for like millions of dollars, but if like all they focus about is like coding and making money, they're not a fit for Club Y. They need to be kind. They need to be kind. They need to have like interests outside of outside of things they do. So like we have people who are like, I ran 4 marathons this year. So we have like a whole like club by marathon section. We have people who have written kids books for blind children, blind children playing chess. So we have like just like really, really unique humans. And I think that's what makes us like stick together. And the world is really global. And like there's so many communities. You can find amazing communities in Boston, Paris, New York, London, SF. But like the one that's really global and lives like online and offline is us. So I think that's like a really good community to be, willing to be a part of and invest your time and like us investing your time in you.
And how many founders in your portfolio you have in your community
For
portfolio?
Workshop Lab or for Club Y?
Both.
I'm not really allowed to disclose how many Club Y members we
Okay.
have.
Okay.
Yeah, but like we have a wait list of the founders that we have not accepted, and we have some tenured founders who have been there since the beginning. And we have some bigger communities that we're partnered with that sometimes refer us people who they think are ready to be a part of Club Y. And within the bigger communities, there is around like 2,000 plus founders, but we intentionally keep our wait list still going. And when we're more ready also to have an in-person event, let's say in Boston and stuff, we kind of like still like tap people and etc. But for Workshop Lab, we worked with over like I think 20 founders this year total. It really depends case per case. Like, do they need like a boot camp? Like, do they need just like we had like a founder's divorce we were dealing with? There's just like a lot of things like that are more full service. But the best one is just kind of like, as I told you, founders diagnostic test, and then working in for 3 months together on the final goal of the founder. Yeah.
Awesome. Awesome. And last question. If you had to give one piece of advice to a first-time founder starting today, what would it be?
I think a very typical advice is to fail. The whole like fail thing. But I think the more important advice would be notice when you're failing and start either learning from that or moving on quicker from that. Like, do not wait till you fail like so, so deeply to be like, oh my God, this was horrible. Like, notice this was a failure and like move quicker. So that would be like my kind of thing. It's okay to fail, but like do it that you like reflect on it faster, if that makes sense.
Yeah, thank you so much. Thank you, Eva. It was awesome and a very
Thank
useful podcast for founders.
Yeah, no, oh my God, thank you so much. And thank you for thinking of me.
Thank you.
Thank you.